Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Near Protocol. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of the screen. Now, let's jump straight into the TA. Taking a look at the daily chart, if I zoom out, we have a Fibonacci retracement set up from the swing low printed all the way up here in 2022 in January. And you have the swing low printed all the way down here in January of 2023. So we have a swing low, which is our bear market bottom here, presumably, and the all-time high price printed in January last year. So the 1.618 is sitting up all the way up here at $110. We have the 1.414 sitting at $62, and we have the 1.272, which is our minimal target, sitting at $42. So those are going to be our bull market targets. In terms of the local uptrend that we're trying to build here, as you can see, we're printing a higher low over here. So we're holding this low. We went up, came back down. We're higher than the previous low, which is good. And what we need to do now is we need to break above this high that we printed in February in order to continue the local uptrend. So you go up, down, up, down, up, down in such a way that you continue this uptrend. And obviously at some point you're going to have to break it and have a retracement down. But for now, it looks like we're doing pretty good, and we're already building a little small local uptrend here as well. This local support trend line here is a great example of this as well. And you can see if I break, or actually not break, but bring another trend line in there. So you have one high in March, second high at the start of April. So this was some sort of a symmetrical triangle that you had here, and you're already breaking to the upside. So the 20 EMA is trying to cross above the 55 EMA, which is the red line. And once we have that on the daily chart, that's going to be a massive bullish signal for a local uptrend, just like we had one here in January of 2023, just a few months ago. If we take a trend line from the top of the symmetrical triangle all the way down to the bottom, and we place it at the point of breakout, we could be targeting the the 1.414, or sorry, the 0.236 fib at $2.40. So that could be our target moving forward in the next few weeks or in the next few days. Who knows? Sometimes we move quite impulsively, as you can see. And like I said, the important thing for us is to break that high. So let's say we are going to break that high. What can we start targeting to the upside? We have the 1.618 target at $3.50, which is near the 0.382 fib if you're looking at the larger fib in the background. But if you're looking at the golden ratio here on the smaller fib, you have the 0.618 sitting at $2.30. So that's going to be a massive level for us to break above. Once you break above that and you hold it as support, the retracement to the local high here is almost guaranteed. Well, not guaranteed, but usually you do retrace to the swing high after you break above the golden ratio. Usually that's what happens. And if you break above the swing high here, the 1.618 is usually your technical target. So that's the way it works with this fib. For now, we do need to break above the 0.382 at $2.08. And I do have a nice bag of Near tokens myself, and I'm going to be obviously looking at those targets in the bull market, probably selling around $50 to $60, but we'll see. That's my plan for now, and hopefully we go even higher than that. I'm not sure. Obviously, I cannot look into the future. I can only speculate based on the project's team, their marketing, and their development. Now, taking a look at this red support block that we have set up, anywhere between, so from $1.91 down to $1.54. We had this support block set up long time ago. We broke down below it in November. We came back up, and now we retraced all the way down to back test this support block as support. So we came back down, back test, and now we're moving to the upside. So potentially this is the last time we're going to be sort of touching this support block. Maybe once we come up, we have another retracement down. That's going to be another good buying opportunity. I know I will be buying if we go down to this support block. But for now, you still have an opportunity to dollar cost average into near. I would say this is a nice level for anyone who missed out buying near over here at these lows below $1.50, which was definitely a good buying opportunity. As you can see, $1.26 for a bear market bottom. That was pretty low. And you also have a resistance level here sitting at $2.24 roughly. So as you can see, that was a support level actually that we held a few times in January. We had a little fake out below that, then once again held it in February, and then we dropped back down. So yeah, you have a couple of resistance levels to the upside. If you're looking to swing trade, obviously take a look at the daily RSI and never take profits or never sell unless the RSI is not in the overbought. So once you're doing something like this, that's when you can start taking profits. But if you're sitting down here and you're selling at this price and expecting to see something like that, well, that's not very smart, is it? Because when you're here, there is not a lot of incentive to go down unless there is a strong pullback. However, when you're sitting all the way up here, you have a lot more chances of going down. It's simply due to the fact that you're very overbought. So a lot of people buy in over here and a retracement has to come. And from this local high here in January, we started a channel down pattern that we eventually broke out of with a nice double back test. We broke out, and now we also had actually a breakout above the pink resistance trend line here. So this is going to be a nice area for us to back test as support if we see a pullback. So this pink trend line is something that you want to eyeball. We had a back test in February, we had a back test in March, we had a back test at the end of March. Finally, we broke above, and now we're hoping for that back test of support. That would be a nice buying opportunity. And taking a look at the support block that we have here below us, set up from 32.6 down to 28.1. Now, every time you land in that green support block, or let's change the color. This was teal. Let's make it purple. Actually, that was the outline. Let's make that purple as well. Okay, what's going on here? There we go. So once you enter that purple support block, you tend to see a move to the upside, and you have your emergency support block down below here, as you can see, at 24.5 roughly. And every single time you touch that area, you have a major retracement to the upside. And before we continue with the video, guys, I quickly want to give a shout out to everyone who has joined my Patreon. Thank you very much. And if you want to become a part of the Patreon and, get access to a lot of exclusive content, such as podcast episodes for patrons only, my trade alerts, my entire portfolio. I share everything that I buy and everything that I sell. If you want to leave some requests, we can take a look at your projects on Patreon. So there's a lot of cool stuff going on there. I try to do daily updates and daily posts in there. So if you want to try it out for free, you can do that as well. There's a 7-day free trial, so you can do that and let me know what you think. Let's get on with the video. Taking a look at the weekly, as you can see, we have started printing a lot of candles below the 20 EMA. We didn't manage to break above it in February, so the 20 EMA is going to be a major resistance level for us moving forward. So with this impulsive move to the upside, if you're looking for a little swing trade, you could be targeting the 20 EMA on the weekly for an exit. That's around about 10% of profit, which is okay, but I would not be selling this early, right? If you're looking to take profits, let's say during the summer move to the upside, which I'm pretty much expecting, and I'm hoping for a bull trap in September or August, because that's usually when we see bull traps. And this zone over here, this trading range that we created in 2022, I think that can be definitely retested in 2023 here during the summer. And if we take a look at the volume candles, a lot of volume coming in here. As you can see, big volume candles. This is very bullish. And this shows that there is demand for the project, probably some smart money entering near as well. Now, if we go into the 3-day chart and we open up the patterns here and the drawings, so obviously we have the support block there, we have the falling wedge, all of that has been discussed already. And actually, if we go to the weekly real quick, it looks like we are sort of having a bull flag here. So we have the pole and then we have the flag over here. So the potential breakout to the upside here could be something along $4.10 roughly. So the 0.786 fib is something that you can be targeting, for example, because this is looking like a nice bull flag here, which means that you have a pole, right? This major move to the upside, and then you have a channel down pattern. And once you break out of that channel pattern, you are looking for your target, which is at $4.10. And taking a look at the 3-day RSI, where is that? There we go. So as you can see, the 3-day RSI, we're waiting for a back test of support. We were waiting to come back down into this purple support block that we have been retesting as resistance multiple times since September of 2021. So next up was April 2022, August same year, September same year, November same year, and then finally in January this year we broke above, and now we're hoping for that back test of support, and that is going to be your major entry. So if you miss that entry, then probably we're not going to be seeing near coming back down, in a while, because this is what I'm hoping for. This is going to happen after the bull trap. So we're going to see one more major pullback this year, and after that off we go into the bull market, guys, into 2024 and 2025. So don't feel the FOMO, and average in when you can. Don't buy the green candles, but make sure you are exposed to the markets at some point or in any sort of way, because really if you aren't in the markets by this point, then you're sort of missing out, in my opinion. But like I said, everyone has a different financial situation. If you feel that the Bitcoin's price is going to be dropping even lower and altcoins will be dipping, well, be my guest. You can wait, of course, but if it doesn't drop and you're waiting down here for those buy limit orders to fill out once the price starts flying, and we're sitting at $10, you're not going to be very happy about the situation. So that's why I'm already exposed to the markets. These cheap prices is low enough for me. I'm trying to stay conservative with my targets and with my buys. And that's pretty much everything that I wanted to cover in this update. If I missed out anything important, let me know down below in the comment section, and I'm going to see you in the next update. Goodbye.